Can we talk about money traps, but as grown-ups? Because not everything is black and white, right? I can do a video saying, don't do this, don't do that. But the truth is, this money traps can actually work. That's why it's a money trap. Because at first, it does look as though it would work. It does look as though if you play it right, you could take advantage of it. But it's a money trap for a reason. So I'm not going to go the route of don't do this, this is wrong. No, let's discuss it, discuss how it looks like it could help, how it looks like it could work, and why it's at the end of the day a bad idea. Shall we? Starting off with adjustable rate mortgages. I was surprised to find out that these mortgages are on the rise, although I can understand why they are on the rise. But let's break it down. For those who don't know, adjustable rate mortgages are home loans where the rate on the mortgage does not stay fixed for the life of the loan. It starts off fixed for a short period of time and then it becomes variable. Most likely 3, 5, or 7 years, it stays fixed. And in most cases, the fixed rate is a lot lower than the current market rate, which makes it attractive. But after that fixed term of 3 or 5 or 7 years, or maybe 10 years, it goes into a variable rate, which means your rate increases, most likely will increase every single year until it reaches whatever agreement you have signed or when it reaches the market rate. Whatever you sign on the paper, the point is it starts off fixed for a very short period of time and then it goes variable. These type of loans are very attractive because realistically, it kind of makes sense, right? Because you get it fixed lower than the current rate. And for someone who is buying a home, I know how tempting that is. And then before you go into the variable term, you can refinance. And so it's the best of both worlds. Or you could even sell, especially if your fixed term is for 7 years. You may end up even selling before then. And so you get a very low rate. You sell, you come out of it clean and not pay so much in interest. It sounds like it should work. But you know how we know it doesn't work? Because it's been done before. A lot of these money traps, they're old game. They've been played before. They just show up in a slicker way or with a fancier name, or they re-show up as themselves and it now looks attractive because the economy is as it is. Right now, rates are super high, right? No one wants to be buying a house at 8% or 7% because dang it, it's expensive. Your mortgage is high. And so this is showing up like its usual self and it makes sense. But here's where it doesn't make sense. And here's the trap of it. Everything you need to make this loan work for you when you get into the variable term is all out of your control. You're thinking at that point you would refinance. Well, the banks have to be willing to refinance for you to refinance. And for those of us who were around from 2008 all the way to 2012, 2014, we know things can happen where the banks do not want to touch a loan. They do not want to refinance. And even if they do, it's not going to be favorable to you. At the rate which these rates are going up and these home prices are going up, anything can happen with the economy, which makes it most likely that the bank would not want to refinance any loan at that time. Mind you, we just went through something no one could imagine could possibly happen. You don't plan to refinance, you plan on selling, great. But no one sells at a loss. I mean, that's a loss. At least you want to break even, right? Even that is out of your control because for you to sell and break even, everything would have, the market would have to be right, right? And if we're talking about what we experienced in 08, 09, 10, 11, home values were lower than what they were purchased for. So if you're buying a home now and your plan is, well, 7 years, 5, 6, 10 years from now, and then I'll sell and that way I never have to deal with my rate at a variable rate, are you sure that the market value will work in your favor at that point? Now, no one has crystal ball. It may work, it may not work, but that's the money trap because you're playing with fire. You're playing with a variable rate, i.e., if it doesn't work, if the market is not in order for you to sell to break even, you're in big trouble. So rather than falling for this money trap, a money trap that 70% of those who use it regret using, you were better off getting a fixed mortgage. Now, I know I'm not dumb. If you're going for an arm mortgage, chances are you can afford a fixed rate. Then it's better to wait it out. It's better to put your money, whatever you would have used as a down payment, put that in a high yield savings so it's zero risk while you're beating inflation and wait it out. Wait for when you can afford to do a fixed rate. And even if it's higher than you would like to do, like some of us would like to do, well, then you can refinance. But if you can't refinance, it's fixed. You can still handle what you're paying, right? It's a win-win situation that way. But when you go the arm route, chances are you'll be one of the 70% who regret using an arm loan. Now, I know math. That means 30% do not regret it. Who knows? Maybe they don't. Maybe they're okay with it. Maybe it worked out for them. But who in the right mind sees a 70-30 odd and says, yeah, you know what? I think I'll be the 30%. Who does that? If you're doing that, then hey, you know what? You can stomach more risk. But for those who know math and know probability and know statistics, not that I got A's in those classes, but what I'm saying is it doesn't take a smart person to see that a 70-30 are not good odds. Moving on to the next money trap. I know you all have been waiting for me to say this because this is Money Trap 101. But like I said, we will address it realistically. Not don't do this so that we're addressing it like grown-ups, right? Buy now, pay later. I'm not going to knock buy now, pay later because it does work. It does come in handy, especially for low earners, low income, because it's a way to afford something you need without greatly affecting your monthly cash flow, right? Rather than paying $200 flat, I can break that $200 into $50 every month. I can afford an extra $50 every month, but I can't afford a one-time payment of $200. I can give you the spiel of every personal finance. Pay if you can't pay for it 3 times, then you can't afford it. Rubbish. Let's be realistic here. Buy now, pay later is a great way to save our behinds. It's a great way to make things affordable. And I would know because growing up, this was how my mom was able to afford our dishwasher. This was back when, apartments did not come with dishwasher. Now they come with dishwasher and microwave. But back in the day, you buy your own microwave, you buy your own dishwasher, right? And back then there was such a thing as rent a center. Chances are she ended up paying more for the dishwasher than she would have if she had paid for it out flat. But either way, the point is it was a way for us to afford to have a dishwasher in the house without it being too much of a stress because her monthly expenses only went up a little bit by whatever, $50, $25, either way. So I'm not going to knock it because it does work. Now, could my mom have waited a few months, saved up some money, and then afford the dishwasher? Yeah. But I also know when you were low income, it's very hard to shell out $350 to buy something compared to bringing out $50 every month. Because when you see $350, you can come up with 10 things $350 can go to, right? So I get it. I understand. But here's where we are having problems. And here's where it's becoming money trap. One, the type of fee, the type of rate you are getting on this buy now, pay later. It's penny wise, pound foolish. I know that just aged me, but it applies. If the fees, when you add up the fees and you add up the rate, the amount you end up paying, if we gave you that amount to pay up front, would you still consider this a deal? I.e., if that dishwasher would end up costing $500 compared to $350, would you buy it at $500? Well, if you can't buy it at $500, then you know that monthly payment you're doing will end up being $500. So are you aware of that? Are you okay with that? Maybe you are, and so it's not a money trap to you. Cool. I told you we're addressing it like adults. Here's a major money trap, though. There's an understanding that chances are you're going to be late on these payments. We've all had credit cards. We've all been late on credit cards. We know how it goes, right? And so you got this deal. You got it 25% off, but you were late on the payment. They can't forgive another late fee. And so that late fee goes on. Guess what? It's no longer a 25% off deal. You've now paid full price and then some. There's overspending. It leads to overspending because it gives you a false sense of what you can afford to buy or what you should be buying. So, say you've decided, I can spend $200, no biggie. Well, you're not just buying one item for $200. No, your buy now, pay later payments is broken down. So, you've bought $400 worth of item, but technically you're only spending $200 right now. So you're looking at it as you spent 200, but the truth is you've actually spent 400. That's just 1 month. Next month, because you've gotten into this behavior of buy now, pay later, I'm only paying some now. Next month, Here comes another 200, which is technically another 400. Another major trap is I'm seeing this buy now, pay later on things that do not, you have no business using buy now, pay later for it. Like I said, I understand when it's a need. How is your makeup a need? Because I'm seeing it on when I'm going to buy Amazon makeup or stuff on Amazon. Now, a lot of things on Amazon that I'm buying is not a need. Some things are need, but a lot are not a need, right? And I'm seeing the option to buy now, pay later. Now, I only know Amazon because honestly, I only use Amazon. Between Amazon, Walmart, and me going physically to a store, I don't really shop anywhere else. So, but you know where you shop. I'm seeing buy now, pay later and flex payments on clothes, makeup, what else? Jewelry. How? What? How do you justify paying more for an item you can actually get cheaper if you wait and save up for it, maybe wait a couple months and then you can actually pay for it rather than paying interest and fees on it? How are you doing buy now, pay later for makeup when you can go to Walmart or Walgreens and buy you an affordable makeup that would do the same? Now I know this is not a professional makeup, but when you look at my face, you're not seeing if it's Fenty or what's the other one? What are all the other names? I'm trying to be cool here. What are some new ones so I don't age myself? What's the newer one? A lot of us are very aware of credit cards and how it can ensnare us and how we get into trouble buying things we don't need on it. Well, buy now, pay later is just a new way of you using a credit card. Oh no, they're just taking the money out of my account. I'm not using a credit card. But honey, if it has interest and fees, what the heck is the difference? You owe it with additional fees and interest. What the heck is it? That's a credit card. What? Yeah, they're taking it out from your account. I'm sorry, your credit card payment isn't that from your account? I'm not trying to be condescending. I'm trying to explain to you how buy now pay later is an old game, i.e., credit card. It just has a newer name, buy now pay later. A few years ago, well, not a few years ago, decades ago, it was Rent a Center. Rent a Center was not wrong. Rent a Center helped us not having to do dishes by hand as kids, but it's the same game. And so they are banking on, as a company, they are offering this because they're banking on the fact that one, you would most likely be late on payment and they've made their money, interest, they've made their money, fees, they've made their money on a $150 outfit, which chances are you don't need. And if you need it that badly, you can find a cheaper one that will look just fine at the mall or at the store. If you need it that badly, you can find another outfit that works just like heck. Go to Shein, put in whatever it is that you're tempted to do buy now pay later for. And whenever you're tempted, ask yourself, is this a need? Is it a want? And if it's a want, is this just because I can't control my spending? Uh-huh. You gotta put that mirror up sometimes. Even me, trust me, I have to do this to myself too. We're choosing to owe just because we can't control. We have to have it now. Why? Because it's not a need. Why? When we have other options, why? Two things. There are two things I want you to keep in mind every time you're tempted to use buy now, pay later for something you don't need. And even sometimes for something you think you need, because it will help you really figure out if you need it. Every time you use buy now, pay later, you just increase your monthly expenses for the next several months. Every time you use a buy now, pay later, you've just decreased your monthly income. I know a lot of us need a raise. You've just decreased the one you have, the income you have. So is it worth it? Is it smart? Or are you about to fall into the trap that these companies know you would eventually fall into? All right, that was a little bit intense. So let's lighten this up a little bit with the next money trap. I tried to think of a very concise, short and sweet, straightforward name for this next money trap, but I couldn't. It's these reoccurring sales that we have. There was a time when we looked forward to Black Friday and July 4th and Memorial Day sales because those were the, huge days, and all the stores would have sales, and it was heck, it was fun. It was, you knew you were going to get some. Whether or not we got deals, because back then we didn't know, and now we kind of know the game. But whether or not, but we knew these were the major sale days, right? But now we not just have Black Friday week sales, we now have pre Black Friday sales. And then we have Christmas sales, pre Christmas sales. And then heck, we have Christmas in July sales. And Amazon knows, heck, why wait till only holiday season? Now we have Amazon days, not just once a year. We have it, I think we have the spring sales, right? And then Walmart is like, well, Amazon is not going to get all that money. Nuh-uh, we're coming for the money too. So now we have Walmart sales. And if you shop at Walmart, if Walmart has a sale, you're going, what? It's going to be a lot cheaper. Walmart sales it is, right? We have all the sales, and Target is not just going to sit there and let Walmart and Amazon have fun. So Target has their own sale. The point is, we have so many sales throughout the year that tells us they're your major sales. So think about this. If you're the company and you know throughout the year you're going to have four major sale days, are you really going to be giving us a great deal on those days? Let's think about that for a minute. From the company's point of view, how big are these deals, right? So thinking about your own wallet and how this is a money trap is, don't get deceived by all the sales. And because what these sales do is they put us in spending mode. Trust me, I know. Listen, I'm me, myself, and I too. I have to watch for these things, right? They put us in spending mode, and there's sales. Let's go buy this thing now that it's on sale. But in some cases, I'll give you true story. True story. We were looking to buy a TV. We wanted to buy a big TV for one of our rooms. And hubby, being the guy that he is, he had the TV in mind. He went to the stores beforehand. He checked out the TV he wanted. But he did this weeks beforehand because we were genuinely looking to buy TV for the rooms. But then we thought, well, you know what? Black Friday is coming up. Let's hold off, right? Week before Black Friday, the price went up. And then on Black Friday, the price came down to what it was weeks before Black Friday. Am I making sense? So before Black Friday, weeks before Black Friday, it was $10. And a week or a week and a half, 2 weeks before Black Friday, the price went up to $20. And by Black Friday, the price came back down to $10. Now, if we had not been in the market for the TV, we would have thought, ooh, price has gone down. It's down to $10. But the truth is, it was $10 a month ago, right? Now, I'm not saying you wouldn't get deals on these sales. Don't get me wrong. I've gotten some major deals because, like I mentioned in one of my other videos, I have a list of things that I would like to get. They're not needs. They're not, it's not wise to get them. And so I don't get them. I just put them on my list, right? And when it comes to those sales, I go in and I see which has significantly reduced. And by significantly, I'm not talking 25%. I'm not impressed by 25%. 25% does not wake me up in the morning. 50%. If it's a sale, it better be a sale. Even Walmart. Walmart is good at tricking you. You know, when you look at that before price, it was $15 and now it's $13. Excuse you. I know for some people that's a deal, but to me, no, it's not a deal. Not for something I don't want. And that's my point. The money trap with all this recurring sales is that it puts you into that mood of, ooh, sale, let's buy. And there you go spending because you're thinking you're getting a deal, but in most cases, you're not getting a deal. And if you cannot afford to get it Amazon days in April, just hold on. Amazon days in October, you'll get it. Black Friday, you'll get it when you can afford it, when you can pay for it without using buy now, pay later. Okay. That dress, I keep coming down to the dress, probably because I need to buy a dress. But whatever it is, don't let the sale get you into trouble where you then spend what you should not be spending because you can't afford it. Or because you know what, that money can go into something else. Because a lot of us can afford these things. It's not a question of can you afford. It's a question of the right way to manage your money. And so rather than every 2 months because of this sale, here you go spending an unplanned $200 because you're getting a deal, maybe hold off because you know we have 3 4 other sales coming up. And then you can actually pay for it then, and then you can actually use the money you've set aside for holiday spending to buy that stuff rather than doing holiday spending in April and then come spring again and then come summer and then come fall and come Christmas. Do you see the trap here? So I'm not against these recurring sales. Heck, they help me buy some things that I need, some forget need. They help me buy some things that I want as well. Even right now, I have certain things on my list that will we actually need for our house when we move in. But I have it on the list for when we move in, and I'll be watching it when the sales. But I have the mindset that a sale is a sale for them, not for me. So it's going to have to be worth it to push my hand to buy when I'm not ready to buy. Do you get my point? If you get my point, let me know in the comment. All right, let's move on to the next money trap. Not having a long term plan for your money. It's a huge money trap because without a long term plan, without a vision on how you want your money to go, you will very complacent with your money. You just letting every month go as it wants to go. Now, not having a long term plan goes from budget to savings, but it even goes beyond that. When you don't have a plan for where you want to go financially, how you want your money to pan out financially, puts you at risk of making decisions that give you short term gains, but in the long run, it ends up hurting you or it ends up shortchanging you. Short term mindset is stock values fall, you panic because you can't afford to lose any money, you don't want to lose any money, and so you sell, you dump those stocks right away, and so you end up losing money. Long term mindset is, well, this is what happens with the stock market. It goes up or down. We're going to wait it out and it will gain value over years. You qualify for a house, but you only qualify for that house because over the last year you've been getting overtime and that inflated your income, helping you qualify for the loan. But now your mortgage is more than you can afford on your typical income. So every month you are under financial stress. Even with stocks, capital gains made over stocks you've owned for a short period of time is taxed at a higher rate than stocks you've owned for a longer period of time. Even if you're doing the easiest, smartest thing to do with your money, which is to just save, reduce your expenses, and the rest just keep shoving it into save. Well, there's one who saves, and then there's one who saves and grows. But if you don't have a vision for your money, if you don't know what you want to do with your money or how you want to live out your life financially, all you know is, well, I'm putting it in savings. And there's nothing wrong with that. But you could be doing better and end up saving yourself the work and the energy and the toiling. Am I dramatic enough? That happens down the road because you have not learned that you could grow money. Saving is great, but how else can I diversify? How can I get into real estate when I'm not a millionaire, right? How else can I get into real estate since it's a tried and true way of getting into real estate? That's having a plan, that's having a vision. I want the lifestyle where I can freely spend, freely give, not extravagantly, but I'm not so limited. When you have that plan, then you're looking into ways to make that happen. But when you don't have a plan, all you're doing is just, hey, I'm trying not to overspend and I'm trying to save. That's it. That's good. But chances are you're going to have to keep working. I would grow at a faster pace than you. I hope this has helped some of you. So if you've enjoyed this video, thumbs up. If not, thumbs down. But if you're giving me a thumbs down, you have to let me know in the comments why you're giving it a thumbs down so I know. Do it with your chest. All right. Thank you so much for watching. I will see you in the next video. Bye.